What's up, everyone? Welcome to this week's broadcast, and we're gonna go just start off with the Dow, which was down by 1.4%. The S&P 500 was down 1.3%, and the Nasdaq was down 1.6%. As we stated in previous broadcasts, you're gonna expect the Nasdaq to go down a little bit more than the Dow and the S&P because it has all those high beta tech stocks, which, as we saw in this week, they took a pretty big hit. We're talking Apple, Microsoft, Google, Amazon. All those definitely went down more than the broader market. I'm going to introduce this week's top news with this stock chart right here. As you can see, this stock was at $15.50 about a month ago. It traded all the way up to $42.49 a couple days ago, which means it pretty much tripled in a month. So what is this stock? It's none other than Virgin Galactic, ticker symbol SPCE. Now, a little bit about this company. It first IPO'd on October 28th of last year, and it touts itself as the first space tourism company. It planned to begin flying commercial flights in 2020 and aimed to be profitable by 2021, aka next year. Its plan is to charge between $200,000 and $250,000 for trips, basically space tours paying that amount to go into orbit above the Earth, maybe a few longer walks in the future. Their competitors include Blue Origin, which is owned by the CEO of Amazon, Jeff Bezos, and SpaceX, which many of you probably know is run by Elon Musk, otherwise known as the Tesla CEO. Finally, a look at the financials of the company. So far they have $0 in revenue because nobody's flown into space yet, so they couldn't have possibly made those $200,000 or $250,000 per person just yet. And also they lost $138 million to the third quarter of last year. That's up from $85 million in 2018. So instead of becoming more profitable as time goes on, these guys appear to have almost doubled the amount of money that they're spending and losing since that they don't have any revenue right now. And that's why I have a problem with how this stock chart looks. I get it, stocks can go up, sometimes even drastic. We see it all the time with these pharmaceutical companies going up by 50, 100% when they have a drug that goes through a trial and gets approved by the FDA, things like that. However, this company really hasn't had any news and they haven't been making any money. Stocks trade up based on their earnings and expected future earnings. Right now, we know that the earnings for this company are negative because their expenses greatly outweigh their $0 in revenue. And in terms of future earnings, I think we can all agree that management is definitely behind the schedule of where they wanted to be. Let's assume that starting next week, Virgin Galactic is able to start flying people into space. By annualizing their $138 million loss last year, we can get that they would lose $184 million over the full calendar year. Now, let's also assume that every single customer pays the full $250,000 for their trip. That means over 735 people would need to go on that trip within a calendar year for this company to be profitable. And that's being generous because I'm assuming everyone pays $250,000. And also I'm sure that there would be other costs such as fuel, any kind of engineering that they would need to have to accomplish these trips, and also just for insurance, because there's a lot of risk for these trips. And I'm sure that once they actually start operating, there's going to be operating expenses that we don't see with the current R&D expenses. To summarize, we can see that Virgin Galactic is already decently behind on what their management team promised in terms of when they will become profitable. Right now, because they have $0 in revenue, this stock is just a piggy bank or R&D fund for the company. The stockholder is not getting any kind of income to justify the amount that they're paying for the stock. So if you're buying the stock, you're basically hoping that there's somebody who's going to buy it from you at a higher price. And this is just hoping and gambling, in my opinion. If you bet on red 5 times in a row at the roulette table, do you cash out or do you keep going? I honestly think that if you keep going, that's the equivalent of continuing to put all your bets on red on the roulette table. Eventually, luck is going to run out, and eventually the stock will tank because there's absolutely nothing fundamental on the financial statements to justify this kind of movement at this speed with this kind of valuation. And let's be real, there's not really a valuation because they don't have any revenue and any earnings. The stock I am recommending everyone buy in place of space is GlaxoSmithKline. As you can see here, the solid straight red line is an inflection point. It was a previous high, a previous low, and should be a point of support. Now, if you remember from the previous week, support is more of a mattress rather than a hard basketball court for stocks to bounce off of. Luckily for us, the 200-day moving average shown by the curve red line is right there, and the stock has appeared to bounce off of that. This is something we want to pay attention to if we want to buy the stock on Monday. We want to see if it can hold about $42.50 to $42. If that happens, I see a short-term bounce, a very large bounce to $44.50 within the next week to 2 weeks. And should the markets cooperate, we could see this back up to $48 for a gap fill trade within the next month or two. Again, that really assumes that the broader markets cooperate and that nothing shocking goes on with the company. As you can see here, the ETF that Glaxo is a part of, the PPH, which is the pharmaceuticals ETF, appears to have also broken out from a trading channel that it has been in for the past 3 years. Usually when these breakouts happen, we'll see a sharp break above the point, especially when it's been a pattern that has continued for a long period of time, such as 3 years here. So I definitely think GlaxoSmithKline has places to go up, positive technicals on its side, and should be a good entry point for a trade here. So that'll do it for this week's broadcast. Again, please leave any comments on what I can do better and what stocks you would like me to analyze in the future. Any stocks you want me to just opine on real quickly. Thanks, and see everybody next week.